Hello to all traders and welcome back to another market review brought to you by Orbex. So gold is pushing a little bit higher since the Monday's open, over 3% so far this week. And if we look back all the way to the beginning of the year in January, we're up over 27% in price action. So gold does still remain bullish, even though we have had a few rejections at this record high in recent sessions as well. So lots to possibly look forward to for the yellow metal because it is still flexing its muscles. We are still seeing that traders are looking at it as a potential opportunity, not just because of global tensions fluctuating the price. So we'll see what is in store for gold in the near term at least. Now let's just get straight into the chart. This is on the daily at the moment. So I just wanted to show you, as I said, the rejections that we've seen on these particular record highs. Obviously 3,500 is quite a way to go at the moment, just trading around 33.30. More importantly, bouncing away from the psychological 3,000 handle, which is something that traders will definitely want to stay away from, because if we drop through that, then we could be seeing a fully fledged sell-off. But at the moment, it is quite a far away from that because we are seeing more of a bullish rhetoric on the yellow metal. Let's just go straight into the 4-hour chart. It is a little bit flat at the moment, gold, because obviously we've had this decline from the previous double top that we've seen, moving roughly about $100 to the downside. But now, since we've found this bottom, we are now seeing $40 to $50 being added to the price. So gold is still something that traders are looking at, as I said, even though we are not seeing it as this safe haven asset that we've flocked to in times of uncertainty, especially if the dollar is weak as well, which it has been the last few sessions. But don't forget, we are seeing an early non-farm payroll because of the 4th of July weekend coming up. So that could have a little bit of an implication on the jobs numbers. Let's just take a look at oil as well. Oil has been very, very flat since that massive sell-off that we saw last week, well, a couple of weeks ago now. Obviously, with the Middle Eastern tensions calming down, so did oil. And no news means no movement, basically, and it's very, very flat, not really going anywhere. The RSI is starting to pick up a little bit, going towards the neutral zone, but that doesn't really mean too much. Nothing in the way of major divergences. So oil in the near term is just looking a little bit flat. I'm staying away from it personally until we get another direction, until we start breaking either $66 or $64. Very, very stuck in consolidation at the moment. If we look on the bigger picture on the dollar, also on the daily chart, doesn't really give us too much incentive to play with it, because, as I said, we had this meteoric rise because of the tensions, then a drop because of the tensions, and now we're just stuck in consolidation. So for me, I'm just looking at gold personally to see if there's going to be any more opportunities moving forward, and then we'll see what happens if we do start breaking these particular levels. But as always, we'll bring you all the latest in fundamentals and technicals as they come on our Telegram and YouTube channel. So stick with us there, traders. I will speak again next time. Bye for now.